Hello friends, a very warm welcome to my channel. In this video, we are going to talk about Sumitomo Chemicals, which is one of the leading agrochemical companies in India. So the chemical sector has been facing a kind of a slowdown with stiff competition from the Chinese companies as China has opened up, and there's a lot of dumping happening in India from the Chinese companies as they have plenty of stock which has to be cleared. And the inflationary situations have reduced now, so the prices of the materials of these companies have also fallen, so their margins are compressed. There are a lot of opportunities emerging in the chemical sector. It is just that you have to spot the right company who is having a bright future, doing regularly the capex and have some competitive edge. And if you hold on for a couple of years from now, then you should be making decent money out of the chemical stocks. So before we begin, if you are new to the channel, please do subscribe and hit the bell icon. And if you're not a part of a Telegram channel yet, do join today by searching my name on the Telegram, as we discuss daily the market analysis in the morning and various interesting news and views on our Telegram channel. So let's begin the analysis of Sumitomo Chemicals. Please note that this is not a buy or sell recommendation. We are just discussing this for educational purposes as a case study for you guys to learn how to analyze a company in different market scenarios. So this will be the flow of our presentation. We'll start with the business model in brief. We'll see how the stock has performed in the last 2 to 3 years. We'll see the main financial performance of the company, the main 2-3 items, and judge why the stock has fallen from the recent highs. We'll see what is the outlook of the management for growth in the coming years. We'll discuss the valuations and we'll decide what is our view on the stock from here onwards. So Sumitomo Chemicals is a leading agrochemical company in India. It is having a well diversified portfolio which is de-risked in terms of the categories of products, in terms of geography, in terms of various specialities. So it's a well balanced agrochemical company. In terms of brands, Sumitomo has a very strong brands under its umbrella, and it's a research driven company having a lot of PhDs in the research team. The company has a Japanese parent which also gives a lot of support to the Indian entity. A lot of molecules which are researched in Japan which are released in Indian markets too. The company has a strong autonomous board to manage the company, and they have been growing both organically and inorganically in the past. In terms of their distribution network, they have more than 15,000 distributors which are directly associated with the company, and the company has 60 plus depots. They have 5 manufacturing facilities, and the company has more than 200 brands under its umbrella and sells more than 700 SKUs. So by this you can understand the widespread network as well as the basket of products of the company. As we discussed, it's a research driven company, so already has more than 25 patents registered and more than 200 registrations. So if you look at the chart, the stock has performed well in the last 2 to 3 years in a steady uptrend, and it has gone up to nearly 500 to 550 kind of levels from the top, and from there it has come into a consolidation phase and presently trading around 400 kind of levels. So the chart is not showing signs of reversal yet, but 350 kind of a range will act as a strong support for this stock. And unless any major negative event happens, this stock is bound to consolidate in this range of 350 to 400 and build a strong base and then continue its journey upwards in the long term. If you look at the revenue of the company in the last 5 years, the revenue has gone up from about 2,200 crores to more than 3,500 crores. So there has been a steady uptrend in the revenue before and after COVID. In terms of EBITDA, the EBITDA has also shown a steady growth from about 290 crores in FY19 to 668 crores in FY23. So the EBITDA continues to show an up move. In terms of margins, the company was earlier doing margins of somewhere around 13-14%, which has improved to about 20% recently. And now there is a slight pressure on the margins, somewhere around 19% for the entire year. And if you look at the Q4 margin, Q4 FY23, it has gone down much lower than the 19%. So there is some temporary pressure on the margins of the company. Now, as the stock has fallen from its highs of about 550 to 350, 400 kind of levels, we'll discuss what could be the possible reasons of the correction. In terms of growth, FY23 in the last 2-3 quarters have not been that great for company in terms of the revenue growth. And in terms of margins, there has been very high pressure on the margins, and margins have gone down as low as 12% compared to earlier 20% in Q4 FY23. As agrochemicals is a seasonal business, and if there are bad seasons in the monsoons, then the business of these kind of companies get impacted. Due to the excess inventory already with the customers have slowed down their orders, and that's why it has impacted the sales. And due to the falling prices because of reduction in the inflation as well as dumping of products from China, there have been pressure on the selling prices of the products which these companies offer, and that's why they also see a margin compression. So these are broadly the main reasons for the correction in the stock price. One thing you can observe that there is no major permanent disruption in the business of the company, and all these reasons seem to be temporary phenomenon which the company is facing, which will eventually overcome over a period of time. In terms of growth outlook, the management has recently taken over 2 new land parcels for its capex and setting up of new manufacturing facilities. They do regular capex of about 75 crores every year, which they will continue, and they plan to do an additional capex of about 120 crores in the next couple of years, which they will be using for introducing 5 new products. The company continues to focus on the off-patent products and do research on them and bring them to the market in their own brands. And they will focus more towards the Asian and African markets to increase their geographical presence. In the recent year, they have launched 6 new products, and in FY24, the company expects that these new products bring record sales. As the company has continuous support from its parent in Japan, they will continue to get more new molecules which they can launch in Indian markets from its parent. So looking at these growth plans, it seems to be that the next couple of years are also looking bright for the company. Now when you look at the valuations, this company trades generally at a higher valuation compared to its peers, because being a company with Japanese parents, it is expected they are technologically very strong and governance is also very strong. In terms of product portfolio, they have a very wide range and they are capable of further adding a lot of products to their kitty. So that's why it trades as a premium compared to the other chemical companies. And the company was doing really well. The valuations went as high as close to 8 times the revenue multiple, and now it's trading somewhere around 5.5 times, which is a very reasonable valuation looking at the historical valuation which this company has got. So more or less the valuations are also looking bottomed out at these kind of levels. So now that you have understood the business model of the company, the reasons for the fall in the stock prices, the valuations and the growth outlook of the company, what is our view on the stock? If you're already invested in the stock from higher levels, you can continue to hold as the next couple of years look good for the company, but you can't see an immediate upswing in the stock because the chart still looks bearish and there are no reversal signs on the chart yet. From a new investor's perspective, if you're looking at investing in the stock, then you can gradually accumulate on a steady basis, because the stock may further continue for the next few months in the consolidation phase, and after these margins pressure ease out, then you can see the reversal on the charts and the stock may test its new highs in the next couple of years to come. Please note that this is not a buy or sell advice. We are just discussing this as a case study purpose, and do your own diligence before taking your own decisions. So this is about Sumitomo Chemicals. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make more videos on your favorite stocks, don't forget to mention the names in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.